The ultimate aim for any investor or trader is to be consistently profitable. And you cannot be consistently profitable if you don't, first of all, have a trading plan, like an overall trading plan. More importantly than that, to have a trading plan for every single position that you take. A trading plan is a guide that guides you along your trading journey, but a trading plan for each individual trade helps ensure that you stick to the path. This goes with anything in life. It's easier to do something when you know what must be done and what should be done, and when it should be done. While knowing when to enter a trade is incredibly important, and that's kind of what we're going to talk about today, knowing when to exit is equally as important. Trading is a business. You need to treat it as such. If you're going to ask someone or a bank to borrow money and you don't go to them with a solid business plan, you're going to fail. They're not going to give you any money. And it's no different with trading. Well, do me a favor, smash that thumbs up button, subscribe, turn notifications. If you're just finding me now, and this is the first time you've ever seen my face, expand the description down below. This is a series. Start at video number 1, work your way through the series. I promise it'll make you a better trader. And last but not least, do me a favor, hop in Discord, discord.gg/Alpha Aere. First 100 active members who join are going to be grandfathered into any type of pay gate I do in the future. I'm giving away the Alpha for free, baby, every single day. So take advantage of it while it is free. Give me a chance. If at the end of this video, you like what I'm talking, you like what I'm spitting, hop on in. Now let's just get into the video. This video is not about your master trading plan, right? So a master trading plan right here is your general overall trading plan, right? Defining goals, selecting your trading style, writing everything down, strategy development, realistic expectations, first video, comprehensive market analysis, risk management, rule development. Rule development is number 1. If this isn't happening, I'm not going to enter a trade. If this is happening, I'm entering a trade, etc., etc. Trade management plan, managing your trades, how you manage open positions, stop losses, how you're going to exit. Trading discipline maintenance, right? Write your plan down, stick with it. Avoid FOMO, avoid fear and greed. Train yourself to embrace discipline and consistency when executing exiting positions, monitoring and trade evaluation, continuous education, right? And I know you've heard me say it 1,000 times, you know, you develop a plan for discipline. I always say be disciplined, have patience, right? Well, traders should develop a plan in order to maintain a disciplined and systematic approach to their trades. Also, a well-defined trading plan helps remove subjectivity from trading decisions. But like I said, there's a million articles. You'll have to develop this over time. It's not going to be overnight, but you need to start, you need to write it down and stick to your plan. This video is about specific trades. Having a trading plan, master trading plan, is just as important as having a trading plan for every single trade you are in. Why are you going long? Why are you going short? Where are you looking at to take profit at? And what are you doing with your stop loss? Some of you guys have been following me for a long time, probably have seen updates like this from me. UNFI updates, the coin I've been watching. If we flip the long rectangle here, bullish momentum should continue. If we fail a retest, I'd expect more short entries to open up. I post stuff like this all the time on various coins. And that is not just me saying, oh, the price of this coin isn't go up or down. That, you know who says that kind of thing is people who have no idea what they're doing, who have a negative trading account. As a price action trader, as someone who has smart money, I am making a plan for if the price goes up or down. That way I can capitalize on it either way. Let's pick a random coin here just to give you one example what I'm talking about. Let's go PYR. So you can see right here where we kind of hit that resistance level, kind of smashed into it. Fake out retest, broke back down, and we're kind of looking at like a retest right here. We're getting kind of hung up right now. So let's look at the past history. This is on the 4-hour chart, and let's kind of get rid of all those other indicators down here. So here we go. So this top line here where we've had resistance has been resistance before. Boom, a bunch there. We can probably go back and find a bunch more right here. So that's the level. So if we want to remain bullish, this needs to flip. So I'm not entering into a long on this coin. You know, if we were up in this range, it's different being down here, but until we broke up here, right? Because then that bullish momentum should continue because we have flipped this to support, from resistance to support solidly. That means we got a breakout and a retest that succeeded. So we broke out, the retest happened, and that's where you enter, right? You can see here, we broke out, we retested, and we fell right back in. But I also know, so if I was watching the coin kind of in the middle of the range here, I caught this in the middle of the range, I'm looking back at the previous levels, and I know that there's probably a short opportunity up here if we can't cross this line. Or if we cross it, and then when we start to fail the retest, I'm looking for shorts. And that is what I mean by having a plan for every single coin. Now, day in, day out, when I sit down in the morning, I'm looking and I analyze and I figure out which way the general market is going, right? So I figured out which way Bitcoin is going. Then I'm flipping through my altcoins. So day to day, you chart Bitcoin first. That is the first thing that you chart, right? Then you are finding trading plans, trading strategies for your altcoins. My favorite days to trade alts are when Bitcoin chops sideways, because alts are going to do their own thing. You're going to see money start going into alts, as we're seeing today. Rollbit up, Rune, Theta, STX, Neo. A lot of these coins are running, and Bitcoin's down a little bit. You can see Bitcoin dominance dropping a little bit there as well. We found that one on PYR. Let's take a look at LPT, right? Oh, I mean, this is just beautiful, right? So you can see here, I've already charted it in the past, been charting it. You can see how this level, the 7.9629163 level, is major resistance, right? And you saw it here when we tried to break through it, failed retest, and we broke down this channel, traded that channel. Then we got back up here again, probably going to do a repeat there, and it did, right? Came all the way down. And then the same thing happened, and it came down again. So this is where having trading plans and finding this, you can then go back and look and say, you know, hey, we're making a run for it again. Probably another short opportunity. However, if we end up flipping this, there's your long opportunity. Now, here's where the having a plan comes into play. Since we now know that this is major resistance, right? We're sitting at a pretty key support level right here. You know, might be a good time to take a long. However, we are starting to slip it. So I would probably just wait on this one and see what happens. If we start slipping this solidly, I'd probably look to these levels of support below us for shorts. However, if the price was in the middle of this channel right here, right? I wouldn't even want to enter. I wouldn't want to enter. I would wait until we test this support, the resistance line again, before entering into a short. So if we touch it and it starts pulling back a little bit, that's where I'm looking for shorts. I'm looking for those fair value gaps to enter in. I'm looking at those order blocks to find my entry to short it. But if we start to kind of crawl up, right, I'm going to wait for a retest. And if we start bouncing off that retest, that's where I'm looking for a long entry. That is a specific trading plan for a specific coin. You don't need to write all this down. You don't have to spend too much time on it. Just know, set your alerts for a little bit below it, right? So you can go back to it. So I'm going to set an alert on this red line right here, right? So how do you do that? Drop Alt-H, make a horizontal line before your resistance. That way, that's the wrong one. Right click it. And then add alert on horizontal line. When it crosses it, when the price crosses it, I'll be alerted to it even if I'm not on that chart. And then I know to watch it for potential short entry if we bounce off this resistance line. That's having a plan. Now, that being said, you still need to look at all the other indicators and find confluence. Make sure that the money flow is still there. You're not seeing any divergences. Make sure that you're, watch different time frames. So it's still, before you take an entry, you need to properly TA it. Not to mention, when we're in an upswing, you should be looking for longs. When we're in a downswing, you should be looking for shorts, not vice versa. Don't try to catch the market. Don't try to time the market, because it doesn't work out. Well, let's take a look at another one. Let's take a look at HBAR here. You know, we've made a lot of money trading HBAR. It was in a very tradable channel. It had a huge run up. However, we called this. We said, and when I say we, I don't know why I keep saying that. I called this. It broke down right to the T. So now we caught our feet. So we caught support right there at 0.047862, which, if you look, that's been a level before that we have toyed with many times this previous run up, and probably going back to right there, right here a bunch. So you can see how that has acted as support and resistance in the past. So we need to flip this. So it looks like we're trying to right now, so we can try to further our way up. And then what are we doing? We want to look for the next level of support resistance ahead of us, which would probably be like right here. So this needs to flip. So you can see why I'm saying that, right? So you got, that was a test there, here, back here. I mean, just look at that, right? So I'm probably not going to do anything on this from taking a long on it, middle of the channel, until this gets flipped, right? So I'm going to set my alert right there. I'm going to right click it, add alert, boom. If it crosses that trend line, I know to watch it for a potential long or short opportunity off of this line, period. Because you can see even recently how that has worked out right there, right? Expecting it again, unless, this is where having a plan for it going both ways, we go up. What I'm not doing is saying, well, we bounced here. We're towards the middle of the channel, so let me just go long because it's probably going to go up. That's not having a trading plan. That's called probablys. We're not here for probablys. We're here to find entries that are going to work in our favor. And probably going to go up doesn't sound very confident to me. So I'm waiting until we either flip or I'm going to short this resistance again since we got a kind of a bounce to the downside off of it on Sunday, a couple days ago. When you're ready to take a position, let's say we fast forward an hour into the future from now, we retest this trend line, right? This needs to flip trend line right here, and we start bouncing up. To me, that signifies look for a long entry. This is where you bring your master trading plan over to your individual entry. Is it hitting everything you need it to hit in your master trading plan to take a long? For example, is the price of Bitcoin either chopping sideways or going up? Where is Bitcoin at in its tradable channel right now? Where's Bitcoin at in its range right now? Where is the current price of HBAR in its current range right now? Is there money flow, right? In this case, there is. Where's the RSI at? Are there bear divs? What's going on? So you need to do your normal trading plan, TA, once you're ready to take an entry. You don't just blindly enter, right? Look at the liquidity, look at the order books, et cetera, et cetera. So once your factors, right, where if it crosses this line and bounces off on a retest, that's where you bring over your master trading plan into your entry to find an entry. Here's the beauty of crypto and stocks. There are thousands, tens of thousands to trade, to TA, to set up trading plans like this on. While HBAR right now, we're not taking entry on, you keep flipping through them. Eventually, once you get all these alerts set, they're going to be firing off and you're going to find a bunch of entries. Don't quit watching the same 3 coins. Expand. Scroll your watch list. Make trading plans like this for all the different coins that are on your watch list, right? I know you've heard me say it, but trading is 99% waiting, and you are waiting for your entries. Having a trading plan and sticking to that trading plan, both on individual coins like this and your master plan, is having discipline, right? If you don't stick to those plans, you don't have discipline and you're going to fail. Sometimes your TA gets invalidated. It happens to me. It happens to the best traders in the world. Sometimes something happens and we don't expect it. For example, I remember distinctly on that Thursday, the 31st of August, so 5 days ago, when we had that big sell-off happen, I'm telling you, I did a shitload of TA on a shitload of alts in Discord, like an hour before we crashed. They all got invalidated. Sometimes Bitcoin's just going to tank and drag the market down with it. Sometimes the dollar's going to rise or run, drop, whatever, and bring the market up or down with it. So you just got to be ready for it. Sometimes you're going to lose. Sometimes you can get wrecked. Sometimes Bitcoin just drops 12% in a 5 minutes, right? That's okay, because if you do these things over a long enough time period, you're going to win. Sometimes you're going to miss entries. Sometimes you have to take a dump, right? Sometimes the price of, or that level that you needed to hit gets triggered and you're taking a dump. Oh, well, there's 50 other coins that you've TA'd. There's tens of thousands of other coins out there. You do this long enough, you're going to be able to pick this up, draw them quickly, and find scenarios, find trading plans for other coins. You miss an entry, you miss an entry. Move on to the next one. Don't FOMO in. Have that discipline. Stick to your master trading plan. And sometimes you lose. No one's batting 100 out there. I've said it before, and I joke and say Nancy Pelosi does, but she loses sometimes too. And she has insider information, so go figure. Sometimes the market just does the opposite of what we want it to do or what we think it's going to do. Again, over a long enough period of time, if you stick to all these things that I'm telling you and you're doing what I'm telling you, but creating a trading plan that works for you. Because if you're just copying my trading plan or someone else's trading plan, that's not your trading plan. That's not tailored to you. That's tailored to me. So come up with your own plan, stick to it, and over a long enough period of time, you're going to win. So this is all part of price action trading, right? So identifying a scenario. So traders identify a scenario such as a stock price entering a bull phase or a bear phase. Identifying opportunities within the scenario. For example, once a stock is in a bull run, it is likely to either overshoot or retreat. Guessing which path the stock price will take is subjective. It's a choice that will vary from one trader to another, even given the same identical scenario. This is the part that trips newbies up. So price action is often subjective, and different traders may interpret the same chart or price history differently, leading to different decisions. Another limitation of price action trading is that the past price action is not always a valid predictor of future outcomes. As a result, technical traders should employ a range of tools to confirm indicators and be prepared to exit trades if their predictions prove incorrect. Knowing when to enter a trade is just as important as knowing when to exit a trade. Don't move your stop losses. If you just take the L, baby, that's what I always say, is take the L. You took a shitty entry, figure out, dissect, do the math on why you entered where you did, what happened, where you could have succeeded if you would have seen something a little bit differently. That's where every loss you make, journal it out, write it down, back test it, slide that replay bar back, right? Redo it again, figure out where you went wrong, right? Slide that replay bar back, baby. Personally, I set my stop loss and I leave it. If it gets triggered, it gets triggered. I dissect why, what happened, what went wrong, what was I seeing, what the market actually, what I thought it would do versus what it actually did, right? And then I employ trailing stop losses, right? So if the price starts going up, and let's say this is my stop loss right here, right? So I enter in, my stop loss a little below the price, right? 3 to 7%, whatever I enter. And as the price goes up, let's say this is the price going up, this yellow squiggly line here, I'm just trailing the price, right? While giving myself enough wiggle room for a little bit of a retest, right? To come up. But if my stop loss gets hit, baby, I'm taking what the market's giving me and I'm taking that W. When I say don't move your stop loss, I mean when you're entering into a trade. So if you enter into a trade, you should know how much of a stop loss you need based off of where you're at, right? Based off of the wicks, based off of what you need to not get stomped out. 7% is usually where I feel comfortable. I don't move it. So if it starts coming down for it, I'm not moving it down. I'm not taking a bigger L. I'm just going to let it hit it. So I think that's pretty much it for the video. I'm going to dissect one more coin just to kind of show you here. We'll take TON as an example. So TON, you can see I've been dissecting it a lot, trading it a lot. So you can see where we had this zone of supply. So people were selling. That's what this is. This was a supply zone. Now it's flipped to what? Maybe a demand zone. Hasn't been validated yet, but you can see every time we've gone into here, we've gotten down, into it, down, into it, down, way down, into it, down, and then finally we broke up. So this needed to be flipped solidly, and this one didn't even get a retest, guys. So sometimes you're not going to get that retest. This one just shot way up. Finally, it had enough. TON blew up. So you can see this is a prime example of when I say we need to flip this in order to go up. So now you can probably see here is where we met resistance, and you can see where it acted as previous like support here, a bunch here. I mean, look at this, guys. There. So this is the next level, right? So we got rejected. So now I'm looking, kind of to the past, and we're kind of coming down here. So this is a key level 2, right? Right there. I mean, look at this, guys. I mean, how can you draw this any prettier, right? So if we don't bounce here, we're probably gonna come back down and retest this previous supply level. So if it gets a bounce off of it, that might be a new demand level, right? Where buyers want to buy. If not, though, we're gonna come back down into the channel, and this is still a supply channel. So a couple of scenarios could happen here with the current price we're at. So if we get a bounce here, we've be good long entry here. However, it's looking like it's trying to slip it right now. So you would know that once you approach this level, you got to watch your position, right? Because the chances of it going up aren't that great based off of previous history. This is going to be a strong level. It's close to $2 too. It's a psychological level. Nice even numbers are psychological levels. So, you know, if we start kind of round in the bottom here, look for a long, ride it up, and then you get the decision time there, right? Are we going to break out, retest, you hold your long, or are we going to foul it and we're coming right back down, enter into a short? Set your alerts, look for entries based off of the previous and all the previous videos by looking at multiple indicators, because price action isn't 100% of it, right? It's also taking a look at, lagging indicators as well to help predict future price movement. Pretty much it, guys. I think we covered a lot. I hope this video made sense to a lot of you guys. I know I blew through some of this stuff fast, but at least it gives you something to look into, something to back test like we did here with Toncoin and a lot of other coins out there, and just play with, set some alerts and see how it works out for you. You don't have to take entries on them, just see how it works out. TA some coins, find some supply and demand zones like this, find some support and resistance levels, and just wait and see what happens once it starts approaching those levels. That's what it is. Practice makes perfect, baby. That's it. Appreciate you guys. I'll be back for another one of these videos expanding on price action and trying to get you into smart money and away from dumb money. If you like this video, I'd appreciate you guys to like, comment, subscribe, turn on notifications, and then hop in Discord, discord.gg/Alpha Aere, where I'm posting the alpha for free every single day. Appreciate you guys. Later.